Good afternoon. It's Quant Trade Edge, and this is today's wrap up for Thursday, April 28th, 2022. Yesterday, the only thing that we mentioned that was interesting was crude oil, and that was because we'd broken out of this trend line, had a divergence and went back to retest the trend line, and we were still hanging out in this area. And I believe yesterday we were probably around here somewhere. Yeah, whatever, somewhere around here when we made the video. And we have gone and tested this daily swing high. This was 105.42, and we got over that. If we take it back to the daily, you can see it right there. So that was nice. Then the rest of the markets had been a little on uncertain footing, but I wanted to show you something here on the NASDAQ. So there was a very impulsive rally in the various indices today, and I just wanted to draw your attention to one particular bar in this string of 5-minute bars on the NASDAQ, and that is this little one right here. The 1150 bar barely ticked below the previous bar, 2075, about 3.25 points. And the reason I want to raise your attention to this bar is this is something that Al Brooks would call a limit buy. After you have a ton of bars that go vertical like that, I think he defines it as 4 or more, then the first time you test a previous low, it's going to get bought. And we use that same concept in our daily Forex trade when we're looking at the daily chart and trying to find a place where we would want to have a bias long or short in accordance with the bars. We skip those areas where, like, for example, here breaking below, you could say now we have a string of one down bar and we want to look for a shorting pattern, but coming off of something like that is an exception to that which we do. Now today we had a couple of opportunities on vol compression patterns. The one that fired the best was Qualcomm, and Qualcomm had earnings. It gapped up, it came in to test the gap, and if you look at this cup and handle type pattern, the way we look at two things. We look at volume. Take this out of the way. And we also look at, one, we're looking for vol compression, which we could just look at our ATR low indicator, which is the ATR 3 divided by ATR 20. But with stocks, I also find there is another thing we can do, which is look for the absolute lowest range bar. And for Qualcomm, that happened at about 1225. This right here, is that right? Yeah, was both the lowest. Oh no, I'm sorry. This one right here, 70 cents, 27 cents. I guess this was the lowest range bar. This was the lowest ATR 3. If I switch this from ATR 1 to ATR 3, yeah, somewhere in here. And this was also the lowest volume bar up until that moment in time. We later got an even lower volume bar here. And when you think about this from a supply and demand standpoint, the sell-off has been bought back and we have higher lows all the way around, and every time we try to push down, the volume disappears. It disappeared, and we had the lowest volume bar of the day at that time right here. And then it popped up and it tried to push down again, and again it couldn't break this low. And it tried to push down again, and again we had the lowest volume bar of the day, now even lower than the previous one. And basically, when you run out of volume on these attempts to push down, that's your sign that it's ready to take a break to the upside. And you could use it down to the bar, but if you just look at this general area of, call it 146, and we popped as high as 151, imagine what you can do with that, knowing that this area where the volume dried up is going to be pretty solid and not taken out. Facebook did a similar thing. I posted it on my Twitter, and fresh tick lows. That's not good. And this one just fizzled out. It didn't really break out to the upside. So I believe on this one, 12:05, this was the lowest volume bar of the day and the lowest, ATR at the time, lowest range. So that area hasn't given out yet. It may, but there seems to have been significant resistance at the top there. So we'll see how that plays out. And then there was just another pretty pattern. Oh, on Facebook, I wanted to also just point out that our P1 pattern, take this off, caught the low almost perfectly. And interestingly, on TDOC, the same thing happened. P1 pattern caught the low. And I'm going to test that more on big gap moves to see if there's something there other than just watching them within the normal range of things. Another nice pattern that popped up later in the day was on natural gas. Let's give it the LBR 310 and let's see if you can guess what I'm talking about. This was textbook. When I wrote it in, I saved a picture of it in my notes and called it textbook. And the reason it's textbook is because here we have it's a 3 pushes pattern, and I'll go ahead and link the tutorial for the 3 pushes pattern in the video. But we had this really pretty thing and this really pretty thing where this was in the Keltner channel, this was in the Keltner channel, this was in the Keltner channel. And each time we pushed lower, the momentum was higher. And then what you typically get out of this is 2 legs up, and yeah, I guess that's technically a leg. So we've gotten our minimum objective already. Today was also EIA, inventory day, and this bar right here is the 5-minute bar associated with the inventory release. You can see that the first test above it didn't like it, the first test below it didn't like it. First, second test above didn't really like it, and then we're starting to find a home below it. So, initially, this was probably more useful to get out of a trade. If you were short, to get out of something than it is to initiate a long. Even though, for a scalp, this is still a good nickel or more, almost a dime to the upside. This would have also been a reasonable target had the 2 waves not played out yet, just because of that high volume EIA bar. If we put the volume back in, you'll see the significance here. And this happens every week when the inventory is released. There's a very high volume bar, and then therefore the ranges of that bar end up becoming technically significant. So looking forward to tomorrow. Crude, not really. We're up against the daily trend line now. Gas, we did get a little breakdown here, so if we get a ABC type pattern to the upside, there is potential for a short there. Gold has got to be one of my favorites right now, just for tomorrow, for the Forex trade, and that's because this is a very nice setup bar. If we're able to take out that high, we've gotten back above this previous trap area. So if we are able to get above that, that will set up a 4x trade. And then and there was nothing else I particularly liked, but among the indices, Russell again is one that I liked. I would have liked it today for a 4x trade, other than that bar is a little short. But we have this pattern here, which is a 2-period rate of change by divergence. So relative to this bar here, we popped up and then we had 2 bars sell down, but they didn't get to better momentum, and we're starting to turn back up again. Now, based on our count, this being a down bar, with this outside, it's also a down bar. So I would like to see us take out that high and then get our 2-legged pullback. So those are the 2 markets I'm looking for most. And, even just looking at, say, this is a 60-minute, or we can drop it to a 30-minute, we now have, I guess on a 30 it doesn't necessarily work that way. Let's look at it on a 60. On a 60, we have our first swing up greater than the previous swing down. So if we were to pull back any amount and then take out this high, we now have a U-turn on the hourly chart. On the 30 minutes, because we have this squiggle, the same thing holds. If we take it out, it's still a U-turn because now we're taking out an ABC. Anything can happen. We've got Apple and Amazon earnings tonight, so don't get too comfortable. And, I'm also going home relatively flat because of that. But and I hate to mix fundamentals with technicals or larger theories with technicals, because you don't want them to get in the way of just being objective, following the bars and making money. This is really nice to see too. We had a P1 at the bottom of the Russell move. I guess we had one here too. That's interesting. That would have been overnight though. Yeah, 5 p.m. And this was in the pit session, 10 a.m. So, okay. But the dollar index, we are coming up against a multi-year high. And this is actually delayed data. I went and checked the live data, and we got to within 0.04. This high is 103.96. We got to 103.92 today. And if you look at the daily chart, this is what I would call exhaustion, in that on the 2-period RSI, this was already 90, this was 92. Okay, this was 96.6, and then we gapped up from there. So there would be I don't have the intraday. We gapped up from there, and then this is yesterday. So today we gapped up and went even further up to here. So short term, it's definitely exhausted, and there might be a reversal in the dollar coming. And it just kind of makes sense to me that, this final climactic thrust in the dollar coincides well with the drubbing we got in gold, the drubbing we got in the euro, the drubbing we got in the Australian dollar, the drubbing we got in the stock market. A lot of these things react negatively to a rising dollar. And, today, and it was, what do they say, news-wise, makes for a perfect story here. You've got the GDP number that was released this morning was negative 1.4%, and we were expecting a positive 1.1. So, those are the kind of things that can turn a dollar trend, that can turn a, good Lord, turn a dollar trend and turn the bond trend. So if we go back and look at our bond yield chart, although we're up a little bit today, you can see that we had this, I posted this when it was happening on Twitter, but we had our 3 pushes up and we've broken down. So, we would expect 2 legs down. This is our leg up, so we probably get this leg down here. And, these are the kind of things that we need to turn the bigger trend. So, again, it just goes back to, we're at a no man's zone. This isn't strong enough to say that we've bottomed, especially with Amazon and Apple earnings coming out tomorrow. But by the same token, it's hard to want to be short when we're so close to support. So anyway, those are just things in my mind. They shouldn't affect your day-to-day trading. Tomorrow, stay focused. Forex trade on gold, Forex trade on Russell. Those are our top priorities. So anyway, please drop a like and subscribe. Pass this out to your friends. Let's grow our community. We are growing very fast. And I love it. And start asking me some questions. I haven't had any questions for a few days. So if anyone's got anything on their mind, I'm happy to answer.